Valley Talk on News Talk 1580 KGAL.
Well, Happy New Year. It is January the 8th. This is Valley Talk, and we've entered into agreement with the good folks at H&R Block here in the Mid-Willamette Valley, and what we're going to be doing, because there's been so much talk about taxes, the tax rates, the fiscal cliff, so on and so forth, that we partner with H&R Block, and we said, you know what, let's talk about taxes, and let's talk about it over a long period of time. So today's show is going to be the first show where we're going to do that, and twice a month, typically on the first and third Tuesday of the month, when we have our average investment guy, John Gibson, who's in the studio today. John, thank you for being with us on Valley Talk.
Thanks.
But this, we started off, but the first one's going to be a little bit different, because January 1st, or the first Tuesday, was New Year's Day, and it just wasn't a good day to have a show. And so this month only, it's the second and third Tuesday of the month. So mark your calendars down. Next month it's going to be first and third Tuesday. And we have our tax professional, Robert White. Can I use the word tax professional? Tax consultant, enrolled tax agent?
Well, enrolled agent or tax consultant, just professional tax, or just
he's the tax man.
I'm the tax guy.
You're the tax guy.
Yes. I don't take the taxes. I help people save money.
Yeah. Jokingly, as we started the show, I was putting out orange cones around him and said, tax man at work. Tell us a little bit about yourself, Robert.
Thank you. I have lived in the Valley since 1972. Got a PhD at Oregon State in biology, which had nothing to do with anything else, and been involved with business in the area, moving business. But I was interested in taxes a long time ago, not paying them legally, but working. I just enjoyed the challenge of working with the tax code. I got more involved, and I took courses, and the best courses in the area were always taught by H&R Block. For most people, for training, because you have to pass a rigorous tests in Oregon. Took the course. H&R Block hired me at the time. That's about 8 years ago, and I loved it. Just absolutely loved the work. I enjoy helping people work through their financial situation and basically get everything that they're legally entitled to, but help them plan as well, which help with that too. So I've just kept taking more courses and doing more, and I've, as I said, I'm a licensed tax consultant for Oregon, and I'm also an enrolled agent for the IRS. That doesn't mean I don't work for the IRS. It just means I can represent people before the IRS. And I just love the work. I work at the Timber Hill office in Corvallis, but we have several throughout the valley.
Well, God bless you, because people like me need people like you to help us out with our taxes. This year is a very interesting year. There's been the fiscal cliff. We've talked about that. We've talked about that a lot here on the show. It's every hour. You can't turn the radio on or the TV on for an hour without hearing somebody talk about tax code, tax rates, who pays higher taxes, who shouldn't pay higher taxes. It's been in the news all over the place. And, the tax rates, fiscal cliff, should we change the tax rates, what's going on? I think a lot of people like me are concerned about the 2012 taxes. Just what in the heck is going on here?
Yes. And
what should I do? So for those of us who are kind of spinning where we normally are anyway when it comes tax time, more so than ever this year, what's your first word of advice if somebody comes in and says, I don't know what to do? What do you tell them?
Take a deep breath.
Okay, that's a good start.
And because of the passage of the measure, we all took a deep breath, because it helped a tremendous amount, because it was going to be nasty if they didn't pass it. One thing is, whether passing or not is changing, and I know John's made some comments we were talking about. The first thing they need to be aware of is that their payroll tax is going to be increased by 2%. That had to do with Social Security. So that there was a holiday, they called it, which we don't necessarily like that term, but so for the past 2 years?
2009.
2009, individuals have been paying 2% less to Social Security. Now we're back. So
2% less on their gross pay?
Yes.
To FICA?
Yeah, essentially, yeah. It's Social Security.
It's a payroll tax.
Payroll tax.
Yeah.
So that is the definite. Despite all the good things that have happened, and everything else we can talk about, people need to be aware of that right off the top. That's
because that added money to their paycheck, like $86. Now $86 is going to be gone every month from your paycheck.
So the tax holiday for lack of a better term. That's what they called it.
They called it a holiday, and it was
gone.
It was a temporary measure. They should have said it. They shouldn't have used the term.
Right.
But it
temporary
was temporary
tax cut. Should
and
have
it's
been
back. And it was scheduled to come back now, and it's back.
Because if they had just said temporary, people would have gone, oh, well, yeah, I mean...
For example, let's say every 2 weeks I got a check that was, I'm just throwing numbers out here, let's say it was $656, and every 2 weeks I got this $656 check. I don't, by the way, but let's say that I did, and so all of a sudden, next paycheck I get, it's going to be...
$43 less on average.
2% less.
On average.
Because that is now going into your Social Security account.
Instead of your pocket right away.
Yeah.
And back then it was for a tank of gas. Remember, gas was $4.
Sure.
So we've underfunded Social Security for the last 2 years by 2%.
So just be aware that your first paycheck, sorry, it's not going to be quite as much, and because of the tax holiday has went away.
And I'm sorry. And one of the things that it may not show up on the very first paycheck because literally everyone was just sitting wondering what was going to happen. So the tax withholding tables have been held up, so a lot of the employers are just now receiving that information. So it may not be on this first check, but there's going to be a catch-up. Eventually, it's going to catch up, and so it may be the check at the end of the month.
Are they going to have to retroactively do it because they're just now getting the tax tables? Are they going to have to, in the first paycheck, take double because they couldn't do it in the first check, or does it work that way?
I'm not sure.
Okay. I'm sorry to ask such difficult questions.
Well, no, that's a good question, and people are wondering that. I mean, that's just the first thing people need to be aware of right off the top. That's going to impact everyone.
Okay, let's take care of some business. First of all, Quiznos Taste on Us. Quiznos in Albany is a sponsor of KGAL's Valley Talk. At the end of the show, this and every show, we're going to give away a $10 gift certificate, and that is not a tax holiday, and no, we will not take that away. We will give it to you, and guess what? You get to keep it. How about that? And you get to take it down to Quiznos and cash it in for some food. $10, chips, drinks, whatever. Just tell Dale and the good crew down there that it's time for Taste on Us. You just won this on KGAL's Valley Talk, and you're here to redeem it. How you enter the contest is send me an email, dave@kgal.com, or call the station at 451-KGAL or 926-KGAL. At the end of the show today, we'll pull a name out of the hat, and you, my friend, win Taste on Us from KGAL's Valley Talk. Also, speaking of the email address, we are refreshing it as I speak, and we're going to continue to refresh it as we do the show. If you have a question or comment, let's keep it questions, about taxes, 2012 taxes that we want to submit to Robert here, go ahead and send me an email, dave@kgal.com. And also remember that the first and third Tuesdays of the month, we're going to be talking taxes up until April 15th. This month, it is the second Tuesday because the first Tuesday was a holiday. So that's the housekeeping measures. We've got John Gibson, our average investment guy, is in the studio, and we also have Robert White, who is a tax preparer, tax consultant with H&R Block. H&R Block has very graciously come forward, and we've got an agreement with them, and they promised they wouldn't renege on that. And we're going forward. We're going to talk about taxes.
Okay. The next category, I guess, as you've implied or suggested, is people are concerned about what's happening to my 2012 tax return. Yeah. And there's another part we'll talk later about what's going to happen with 2013 as well. There were several issues for 2012 that were addressed, and a lot of these had to do with the fact that these items were supposed to have expired during 2012, and they've been extended. That's a strange way or convoluted way of saying things, but we have several things that were expired December 31st, 2011. But now they've been extended for 2 years, so they run through the end of 2013, and they were considered popular. Well, one I'll start off is called the alternative minimum tax.
Yes, that is terrible.
And I've heard a lot about that.
Well, that's one that a lot of people don't necessarily. My favorite term when I teach classes, it rears its ugly head. It is it's an alternative minimum tax that's in the background. Everyone is subject to two different tax codes, and they don't realize that. There's the one that 90% of us see, 80% of us see, and then and always at the same time, an alternative minimum tax is being calculated. And its original intent when it was started in the, I failed on that, 70s?
60s?
60s, 69.
I think it was 60s.
It originally was set to prevent very wealthy people from hiding building up massive deductions, and it was the intent of it. So people couldn't hide this money, and one of the basis of it, one of the key parts was there was a deduction allowed for income. Well, it was at that time it was around $45,000. When the law was set, and then deduction means taken away from taxable income. Well, it was never indexed,
Right.
which meant that, and it would always expire. So every 2 years, if there wasn't a fix or a temporary patch, the threat was that it could drop back to this 45,000, and we were literally up to the last minute. Again, it was going to, if it expired, then I think it was 60,000. No, over 100,000 people. 100,000 additional people would be seeing a tax they never saw before, because they qualified. They qualified for the alternative minimum tax. Well, this is huge for us in tax business, is because they've now put a permanent fix, and it has been indexed for inflation. So most people will never see it, and won't bother them. And in the past, 2 years ago, this is one of the things that always held us up, because the IRS is sitting back. They can't release the tax tables or into their software because they have to account for the AMT. Well, now they know what it's going to be from here on.
And isn't the AMT now set at 75,000?
Yes, actually, I'm 75 for married jointly, and it's indexed.
So it'll go up.
It's going to keep going up from now. So
our wages go up.
That's huge.
Define index for people that don't know what you're talking about.
Index means it based on inflation rates. And well, here we go. 69 was at 45,000. So now it's 75,000.
You had the guest on last week, right? That did the tax rates, that he indexed things for. So if you made 49,000 back in 1969, you're probably making close to 75,000 now. But that minimum tax was going to go back to 40. It was going to catch all those people in this middle, and it was going to lead us to a recession. Is what it was going to do.
It was bad. It was scary. That was to me, that was the biggest thing.
The fact that they put that off to the 31st,
and they did it that 2 years ago. They did the same thing, and we couldn't do any anyway. So that's a big one.
That's the biggest one.
To me, most people aren't, and it's big to us who prepare, but most people don't even know it was there
until they find
They
out.
would have this year. They would have suddenly seen it this year.
So the good thing is that there's a permanent fix. It's not the patchwork temporary fix. So make sure I understand this. There was a alternative minimum tax was being calculated
all the time
at the same time that the regular tax tables were. Was it an additional tax, or was it
It's whichever one was less, right?
Well, I mean, more,
right?
Yeah.
Right,
so
right, more,
you'd go along, and so you're on your standard tax form, your 1040. If suddenly you had additional tax to be added in from the alternative minimum tax, they would put in additional tax on your form. So you would see a different form, but your tax would go up. And now, again, this is
sure.
That's huge for us.
Yeah. Okay.
Go ahead.
Alternative minimum tax.
Yeah.
So we have a permanent fix there. Go on. You had a thought.
Some other good things. Well, popular. It's a good term. That there's a tuition and fees deduction has been extended. This is where people would take courses. You don't have to be a student or anything like that, and you were allowed to. You didn't have to be on a degree program, but it allowed you to take a percentage of your tuition as a straight deduction off income.
Is that still available?
Now it is. It was set to expire. So that has been extended, and it was very popular. Another one that I thought was fabulous, called the educator's expense. Teachers have been allowed, this is K through 12, have been allowed to deduct $250 of expenses. Now, my favorite thing is, what teacher does not spend a ton of their own personal money in schools? They go out and they'll buy paper.
Pencils.
They're always buying it. They're always taking out their own money. And before this measure, the only way they could deduct it is if they itemized, as a
that long form.
So that we made it this. So this came in that they could deduct the first $250 as a straight subtraction. And I've had teachers. The first year I said, do this and keep track of your records. And she said, do you think I'll do that? Well, the following year, and she kept her receipts. $1,000 easy. But they didn't itemize, so at least they could take the $250. So that has been extended. That was scheduled to expire. And any way we can help teachers, that's huge. It's one of my favorite ones again.
Do they have to show receipts, and what do they need to do? Just
typically, they don't have to show the tax preparer the receipts.
But if they're audited,
they need to always be able to produce them if they're audited.
Okay.
So we ask our clients, if you have the receipts, we don't need to see individual ones, but you need to be able to produce them. If you're ever audited, just it's standard proof. And that's and
how long do you need to keep those records?
I would I usually tell people 5 years. It's a good rule of thumb.
That hasn't changed. That's the same.
Because your return is subject to review for 3. We usually know that after the 3rd year, it's considered closed, and normally that's safe. But I just, as a rule of thumb, I tell people 5.
All right.
Now, if the IRS comes in and says, Mr. Gibson, you shorted us, $3,000, do they just focus on that, or do they go, let's look at 2010 and 2009 and 2008?
If it's a really questionable thing you do, or if it's maybe it's a function of your practice of what you've been doing, but that's that might be a trigger for it, but if it's one odd thing just suddenly, then, and we always suggest people, first off, you get a letter, go talk to someone. The IRS really makes it easy for you to pay.
Oh, yeah.
They give you those options. The first option is just sign here and pay what we owe. The second option is maybe you disagree partially, or some type of thing. So we always say, go find a tax professional, whether you're using your CPA, whoever you're using who's handling your taxes. Go back to them first, and then go through the letter closely. IRS sometimes makes mistakes. A lot of times they're not mistakes. The most common ones we see, though, have to do with either someone missed they get the 1099-Rs, the distribution of retirement money, or something like that. Maybe someone missed one, or because sometimes they come out late, or and the IRS gets these because they're an automatic. Anything has a 1099, the IRS has a copy in their computer. So we get these all the time. They're triggered, and so people will come in and we'll say, first of all, let's take a look, and we fix it. The scariest one for most people is when they get a brokerage statement. So they've reported they've sold stocks, and up until a year ago, the reporting requirements were by the brokerage houses were less loose. They didn't have to report the basis. Basis is what a person pays for it.
Right.
So it was not unusual. All the IRS received was what it was sold for.
That's what I do.
So we would get people come in. They would get a letter, and suddenly they walk in. The IRS says they owe $50,000 because there was no basis. Well, we say don't panic. We'll send in the information showing what the basis is, and in the last couple of years, people were usually a loss, not a profit.
See, what I have to do is I've sold a lot of stock. So say I sold Pepsi. I have to write down what I paid for it, when I bought it, when I sold it, what I paid for it, what I sold it for, profit or loss. But nowhere on there does it say I bought it at 16 and I sold it at 74. It just says I made like $12,000. And so you could easily just say, hey, I lost $10,000 on such a stock, and wipe all that, keep all that profit for me. So I've always wondered, how come they don't want to? Now, on my brokerage statement, they add it up, and I have to add my columns, and it has to add equal to the brokerage columns. And that's how my accountant knows I'm telling the truth. But I don't know how.
The law has changed last year, and which for that exact reason. The new forms issued. The brokerage houses are now required to provide on transactions, I believe, starting in 2011. They have to provide the basis on the form. So that's part of the reason, to track it out both. And the other is that it's sometimes a nightmare for someone who's held stock for a long time, or maybe inherited it. What did they pay for it? So it's,
well, they do have different ways of
doing it, but it's
estimating.
And thank goodness for the computer. But anyway, that's a very common one. What we get is when someone comes in and they've got a letter, and we go through it, and that's I'm an enrolled agent. That means I can talk directly to the IRS to help someone through these issues. And quite frankly, the worker bees at the IRS are they're overworked, and they're very if you give them the information, they will work with you.
Mm-hmm.
So,
and we might have scared some people out there. If you are investing in your 401k or whatever, and you're not keeping track of your dividends and all these things that you're getting on all that you're supposed to keep track of, when you get to age of retirement, there are ways to,
yes, there are,
to work with the IRS and say, hey, come on, man, I just didn't keep records, but here's a good faith estimate.
Yeah, they will. If you try, they know you're trying. That's the key thing. Their feelings get hurt if you ignore them.
Mm-hmm. Yeah.
So they come after you with a big net and a big bag.
That's a good saying.
I always say don't ignore them. Their feelings are hurt.
Yeah, they have that becomes a very expensive issue.
Mm-hmm.
Yeah, they're very touchy about that.
Yes.
We will continue with Valley Talk in just a moment. We have enrolled agent from H&R Block, and he is with us on the show today. We are checking our email right now, my email, dave@kgal.com. If you have a question for Robert White or John Gibson or myself regards to tax issues, tax code, what's different this year, what are you concerned about? We're not taking phone calls, but we are taking emails. So send me an email, dave@kgal.com, and we will include you in the show. This is Valley Talk. More in a moment.
Going out to lunch at a nice restaurant can be expensive, and the big portions put you more in the mood for a nap than a productive afternoon. Mama's Fine Italian to the rescue. The small appetite senior menu is just right. Anyone and everyone is invited to order from the Light Appetites menu for lunch from 11 to 4 p.m. with tasty entrees beginning at only $3.95. Why go hungry or go anywhere else for lunch? Eat health, eat light at Mama's. Closed Sunday and Monday, so make the most of Tuesday through Friday and join your friends at Mama's for lunch. Dinner only on Saturday. Mama's features charbroiled steaks every day. Make reservations for dinner or pick up a bottle of fine wine. Seating is limited, so please call for reservations. 541-451-5050. That's 451-5050. Mama's Fine Italian and Wine Shop on West Oak between Main and 2nd in Lebanon, across from the Big Blue Napa Auto Parts Building. The Greater Albany Rotary Club's annual Crab Fest is coming up Saturday, February 2nd from noon to 8. Fresh Dungeness crab with bread and side dishes, and enjoy live musical entertainment. You'll be automatically entered in the drawings for some great prizes. Pre-sale tickets are $40 and are available from Greater Albany Rotarians, Albany Chamber of Commerce, the KGAL K-Show main studios in Lebanon, and Calapooya Brewing Company in Albany. Support your community and enjoy the fun and feasting at the Rotary Crab Fest. The famous Monterey Jazz Festival is coming to Eugene. World-renowned for its artistic excellence, sophisticated informality, and support of jazz education, the Monterey Jazz Festival is mounting its third North American tour, featuring critically acclaimed Grammy-winning jazz artists Dee Dee Bridgewater on vocals, Christian McBride, bassist and musical director, pianist Benny Green, drummer Louis Nash, Chris Potter on saxophone, and more. One performance only in Eugene at the Holt Center this Friday at 7:30 p.m. 60% discount for middle and high school students, so bring the whole family. For tickets and more information, contact the Shed Ticket Office, 541-434-7000. That's 541-434-7000.
Now you can manage your printers as easy as you manage your copiers. Managed print services from Ultrex. Maintenance, toner cartridges, and repairs, all in just one monthly payment. Hewlett-Packard, Lexmark, Brother, just to name a few. All you have to do is buy the paper. It's that easy. Just call Ultrex today and ask about their managed print services. Ultrex Business Solutions, your locally owned and operated copier company, proudly supporting our community. Ultrex Business Solutions.
The news you need, smart talk, and just enough sports. That's what you'll get from News Talk 1580, KGAL.
And welcome back to Valley Talks. Valley Talk, it is tax time, and it's going to be twice a month, usually the first and third Tuesdays of the month. This month, it is the second and third Tuesdays of the month. And we have an enrolled agent from H&R Block with us in the studios today. And very glad to have him with us today. Robert White, thank you for being with us on Valley Talk.
My pleasure.
And, of course, John Gibson, Average Investment Guy. Don't forget, email is open. We're checking it a lot to see if you have any comments about taxes questions as well. And also don't forget to sign up for Quiznos Taste on Us. At the end of the show, we're going to give away somebody a $10 gift certificate from Quiznos, and unlike the federal government, we're not going to take it back. So you can keep it, all right? It's Taste on Us. Thanks to Quiznos for participating, and thank you for listening to the Valley Talk. So what other changes do we have as we look at 2012?
There are two other that are will actually help some people. One is that they've continued the mortgage insurance premium deduction, and many people are required to pay mortgage insurance. Typically, if they have a lower down payment on their homes,
and it's under 20% down. I think they require.
Yeah, exactly. That triggers, and it's the financial institutions triggered in. Well, that was due to expire for 2012. 2012 returns. So that is back in, and that's and the other one that. Unfortunately has become more and more common is that normally when you have a cancellation of debt, that's treated as income. It's a cancellation debt, and a lot of people see these on credit cards, which is scary because someone gets a...
Is that reported to the IRS?
Yes. That's a whole other discussion. When people get these programs that say, we will cancel your debt on a credit card, well, that is considered income. And
yeah, they never tell you that part.
But there's ways of there are ways of working around that. Legal ways, very legal. That is essentially, and I'm digressing here, but we have a lot of people that come in and they say, I got this, what does it mean? It says, well, initially means it's possibly taxable, but there are methods. For example, if you are technically insolvent on the day the debt was canceled, then it's possible that that amount, that is not treated as income. But that's another discussion. The key thing for this is that when you have a mortgage canceled, a lot of people have had, there's been these programs where they say, we will forgive your mortgage on your home. That's technically, prior to this, was income. So you might have had a mortgage forgiven, but that had to be considered as income. Well, what they have extended, which I think is a program, they've extended that to they will not include that forgiveness as income. So let me ask you a question.
Yeah. Okay, I'm in the process of buying another home through a short sale.
Okay.
The sellers have already agreed to my terms, and we're now waiting on the bank.
Okay.
So they owe more than what I'm paying. The sellers are owing more. So whatever is left over will be considered income for them, possibly?
Possibly. Now, what I didn't qualify, mine had to do with foreclosure.
Oh, okay.
I'm sorry. Someone, they foreclosed on a home, a lot of times in the foreclosures, they will forgive part of it.
I see what you're saying.
I'm sorry.
Back to the foreclosure question. So let's say there was a $500,000 house and the bank wrote it off. 2012, is that income or not?
Should not be.
Should not be.
Because that's
what they did.
They did.
Okay.
They allowed it to continue to be excluded from income.
Yeah.
And
that's good for the consumer.
That's good for the consumer and most of these things were good for the consumer because it was, if their home's being they're already having problems.
I mean, I was going to say,
so don't fall on your sword. They're not going to tax you on it.
Yeah.
Don't fall on your sword. They're not going to tax you on it.
Yeah.
Okay.
Yeah.
Now, back to the question John had was a good question. He's offering, it's a short sale, so is the difference amount going to be taxable?
Possible, and I don't want to, it's one of these things, I always like to look at my notes, but there's a whole scenario in there. It a lot of times depends on how the bank is treating it, and they issue a form when they, on the sale of these, on a short sale, they'll issue, and again, I'm concerned about saying the wrong thing.
Right. Just keep it real general.
I can look that up and have that for next week, too.
Well, it just seems to me like, because the bank is going to go after the sellers for the difference in the amount. Gosh, and then you have the IRS potentially coming in and doubling up. And it's like, when do people just quit?
It could be a possible gain.
Yeah.
Be treated as possible gain.
Boy, and...
Gain means income.
This is so complicated, It's no wonder you guys spend so much time educating yourself. Amgen, a major drug company, came out this morning and lowered their guidance because a tax credit that they were counting on was not included in the bill that passed. And so now they've lowered their guidance, which means one of two things. They're either going to lay people off or they're going to increase their price to get their money back, and neither is a good thing. And so some people get what they want and some don't, and we're in this jockeying position on the stock market of figuring out who's on the inside and who's on the outside. I also have one other question for you. Okay, in order to handle some of this fiscal cliff nightmare stuff, companies like Walmart and Oracle issued dividends that were due to be paid in 2013. They moved them forward to 2012. That sounds like it's a good idea because you're guaranteed a 15% rate. But if you have enough dividends moved forward, that could bump you up into a higher tax rate, right?
Yes, but it'd be an awful lot of. It'd be a big jump.
It wouldn't be us. It wouldn't be people like you and me.
Like you, I call the real world people.
Right, yeah, okay.
And
I was kind of concerned
the
about
real
that.
effect on, we mentioned off screen, the dividends and those sorts of things, which are the people, which are 2013 events, which we'll be talking about, is again those people that are $450,000 and above. There's a lot of things that kick in for them.
So just Dave.
Yes, those radio executives.
I wish. The tax rates for the higher income Americans, did they go up?
For 2013, they do. So everything we talked about now has been 2012, and the fiscal cliff and all these other things they're talking about. The measure really now, what we can talk about is going to be what goes from 2013 income.
Is there anything more we need to talk about 2012, folks? This is what we're filing your returns on as of April 15th for last year.
Not on taxes, and but the other things that were part of this measure was making some things effective for 2013. There was a lot of talk about we had the Obama and Group wanted 250,000. That number was floating around as a measure. The Republicans started off at $1 million, and they end up with a compromise. Which, if no one's happy, then it was a compromise. It's a compromise. No one's, and there was, but essentially the number is that 450,000 for married filing jointly. If your income is below that level, you're not seeing any changes. It's just like what we've been going along doing. If your income is above that level, there are some changes that you'll see. You're going to pay more taxes. You're up to about a 39% rate.
As opposed to, what was it?
36.
Yeah.
So about 3 more.
36 or 35?
35.
Yeah, 35.
But you're also going to pay more, as you mentioned, on capital gains and dividends. That goes up to, that's
20.
Jumping 20%. That's going to 20% from 15. So again, this is only people 450,000 married jointly, 400,000.
And just to put it in context for people, it used to be your ordinary tax rate for capital gains and dividends.
Yeah.
Right. So I mean, when it went from 28 to 15, like for me, or whatever, mine 25 to 15, that was quite a good bump. So we're still below the original.
Yeah, we're still below, and so that's what I want to introduce. Why people, talking about the 250, the 4, that numbers affects the higher income, and it definitely affects the higher income. Some of the other things that have taken place, so again, that are extended through 2013, or some have been extended longer. These are family credit issues. We talk like child tax credit. Since I think 2003 or something like that, we've been at $1,000 per child if they're under 17. Child tax credit. That was scheduled to drop back to $500. If it's back now, it's back to $1,000.
That's not the earned income credit, is it?
No, that's different.
That's different.
That's a different thing. This is child. If you have a child that's 16 or under, then you could, and this is the non-refundable part, which means if you had $1,500 in tax liability, and you had one child, then you would have $1,000 subtracted off that tax liability. Another thing that has been extended that was changing was called it's a refundable portion of that. Some people say the refundable child tax credit. That's not the correct term. It's actually called the additional child tax credit. But refundable in tax world always means you're guaranteed to get the money. So what would happen is, let's go back to my example of $1,500 tax liability, and let's say you had two children. Well, you'd use $1,500, and you'd say, "Oh, I didn't get $500. I didn't get to use." I think this came in during Clinton's time, that they said, "Well, okay, well, if someone is really still working, and they're earning money, maybe there's a way that we can still, if they're earning enough, and they're they could get in, so they could pay those additional, get credit for that other $500 they couldn't take above, and that was called the additional child tax credit. So." But you had to earn a certain amount of money to even qualify for it. So that has been extended, And that's so that's called the additional child tax credit. And again, this is one of those help. And again, it was designed to help people who are working. If you weren't working, you didn't get it.
Right.
So and I am all for incentives.
That's a good incentive. I mean, what that does is that puts money into people's pockets so that then they go out to Target or Walmart or McDonald's or stuff like this, changing, the holiday pay cut thing.
Yeah.
I don't care what it does. It takes money out of the economy, so...
The key I like about that is if they're working.
That's right.
Yeah.
There's two of them. And the other one is the earned income credit, tax credit you just mentioned before. Again, key word, earned income.
Yeah.
This is, again, to help people. And my phrase I usually use with my clients is that typically if you qualify for it, then you need it. Because, again, it is to help people, additional credit, but they have to work. They have to have you have to be earning income. It's earned income, and earn means wages and those types of things. You have to have a job. You have to be working to get the credit. One thing they did is they continued again for if you have 3 children. That was it was going to go back to 2. Now it's back to 3.
Yeah, this came out of that Clinton. Oh gosh, I lost my train of thought. But it was welfare reform, right? They were trying to get people who were easily making $500 to be incentivized to go out and earn $600, give the $500 back to the state. You got your $600, your self-esteem feels better, and we're going to give you a little extra money. That's smart tax policy.
And if you don't earn very much, you don't get very much, and then you go out and the curves. Mm-hmm. But then if you're earning quite a bit, it drops fast.
Right.
So, but again, and most people get that they're working. I mean, that's the only way you can get it. You have to be working to get it.
Yeah.
So that, to me, that's...
I'd agree with you. That's good tax policy.
Mm-hmm.
You ever been incentive to get out there and work instead of getting...
Well, if you get it for free here, or you have to work for it here with no incentive, I mean, I'm going to take the free.
Sure.
God, I'm sorry.
But if they realize, if I work, and we tell people, we tell people who come in, did you work? I said, well, not very much. I said, well, if you work this much more and you got this much more money, you would get... And it worked. I mean, it works. It's I call it a no-brainer.
Okay.
Another one that's important for people in this area is the American Opportunity Credit. Now, that's a fancy term, but that has to do with college. And it was we used to call it the Hope Credit, but it's the point on this is that, again, we're going back to students. And as I said, I was a student for a long time. So, and I had 3 students in college. We didn't have this available when they were there. It allows students to get tuition credit. Again, they have to be involved in school, and they
full-time or part-time.
It's defined as they use full-time, but typically it's if they're at least the university checks that they're at least half-time. Typically, and that's the guideline.
And isn't full-time 12 hours?
Yes,
as I recall.
Yeah. So, but for this, it's typically at least if the university certifies that they're at least half-time, it will work for this, and. So they get a credit. Now, the big difference on this one is traditionally, it's similar to what we talked about in child tax credit. It used to be that you apply the credit against your tuition. Well, especially if you talk about college students that are married and just working part-time, they may not have any tax anyway because they're, especially if they're married. So I say married students are, you don't have any money anyway. So the American Opportunity Credit had a refundable component, which meant that it was possible for them to actually get some money back still. Again, they had to be working, and they had to be fully accredited university, not a university, accredited institution, and they define accredited institution as anything that allows you to qualify for federal student loan. So vocational schools, tech schools, people don't have to go to four-year college. Lynn Benton is students there are a big benefit of this one. So that's the point of this, but it's for undergraduate, and it's to get them through school, and that's been extended. And that was another good. That's extended through for 5 years. So that was going to expire after 2013, and that has been extended out.
How does that work into the tax? Is it a direct offset? Is it what?
It's a credit. It's a credit. In tax world, a deduction or adjustment is a reduction on the income. A credit is a direct reduction in tax. Credits are always better than adjustments, because if you have a $500 credit, that means $500 off your taxes.
All right, we're going to take a break right now, and we're going to be back in just a moment and talk talk more about taxes with our enrolled agent here from H&R Block. Also, John Gibson, our average investment guy, here on Valley Talk. Again, you can be a part of the conversation via email. Send me an email, dave@kgal.com, and be a part of the talk here on Valley Talk. Back in a moment.
The Osgood File. This is Charles Osgood. On Sunday morning, our TV audience got to meet somebody we will never forget. Our CBS News colleague, Michelle Miller, introduced us to an amazing young actress who plays the part of an amazing little girl.
The whole universe depends on everything fitting together just right.
She is wise beyond her years.
If one piece busts, even the smallest piece, the entire universe will get busted.
What is the movie, Michelle?
It's called Beasts of the Southern Wild, a small movie about big things that is on many critics' shortlist for Best Movie of the Year.
Wait till you hear right after this. Where were you when your identity thief robbed you? Was it the airport Wi-Fi connection last week? The free wireless at your hotel? Maybe the mobile hotspot where you got coffee? An MSN Money story has detailed how using Wi-Fi connections can invite identity thieves through our smartphones and laptops. We're potentially handing over everything, bank accounts, social security numbers, passwords, and basically saying, go ahead, destroy my credit, take over my bank accounts. That's why I have LifeLock Ultimate, the only identity theft protection service that monitors bank accounts for takeover fraud. It's the line between panic and protection. Enjoy the peace of mind that comes from arming yourself with LifeLock Ultimate. Visit lifelock.com for details and use the promo code Osgood for a special 10% discount for Osgood File listeners. Or just call 1-800-838-8040 and use the promo code Osgood. 1-800-838-8040. 1-800-838-8040. That's 1-800-838-8040.
Network does not cover all transactions and scope may vary.
Michelle Miller, tell us about Beasts of the Southern Wild.
Its star is a small person with enormous talent. 6-year-old Quivenjane Wallace, who plays Hush Puppy, a fiercely independent little girl who lives in the Louisiana bayou with her father.
The father is dying and wants his Hush Puppy to be smart and fearless enough to survive on her own. At her audition in the public library of her Louisiana hometown, she seemed pretty fearless already. She was 5 then.
Why do you care if I take medicine?
Because I don't want you to die.
It was a 5-year-old Quivenjane's fearlessness.
She always was the most gigantic personality in the room.
That caused first-time director Ben Zeitlin to pick her out from among 4,000 girls who tried out.
She is 9 now. Michelle asked her to...
Tell me about Hush Puppy. Do you know anybody like her?
No, ma'am. She doesn't wear any pants. Her hair is puffy. And
Puffy?
Yes. Puffy. Puffy. Puffy.
Her father is played by a Louisiana baker, Dwight Henry, who had never acted before, but has already been named by the LA Film Critics Best Supporting Actor of the Year. As for Quivenjane, there's Oscar buzz for her.
I'm excited, but I ain't gonna let it get in front of me. I won't, let it get in my way.
World, watch out. The Osgood File. Charles Osgood on the CBS Radio Network.
Hi, this is Paul from Paul's Computer Repair. Media Center's been around for several years, and it's included with Windows Vista and 7. It allows several computers on a home network to share multimedia, video, audio, and photos. The nice thing about Media Center is that it's easy to set up, and the menus and interface are really clean and nice. It's just like using a remote control on the TV. And speaking of remotes, you can buy an add-on remote for Media Center to control everything instead of using the keyboard. Now you can share between the TV and your computer. There are many products out there that will allow you to watch the videos from your computer on your TV, and some are even wireless. There are products that allow you to watch your TV programs on your computer. What does this all mean to you? There are some cool things available to share your multimedia through the house. Some of it's really simple, and some are really complicated and hard to set up. Most of the solutions I mentioned are all things you have to string a couple of pieces of equipment together and spend some serious time setting up. If you have any questions about sharing multimedia in your home, you can call us at Paul's Computer Repair, the one you can trust to get it done right, located in Lebanon, 570-1632.
Take the first step. You know you can go at least that far and quickly discover the next step is within your reach. And the next step, join the Y for free. Now through January 15th. It only takes one small change to make a difference. It takes 21 days to create a habit, so start today. No joining fee now through January 15th at the Mid-Valley YMCA, 3311 Pacific Boulevard, Southwest in Albany. Call now, 541-926-4488. 541-926-4488. Online at ymcaalbany.org.
Get tomorrow's news tonight. John Batchelor, Sunday through Friday nights on Smart Talk 1580.
KGAL Valley Talk, and we are talking taxes. Kind of like talking turkey, only talking taxes for 2012, and we've been talking about that. Now we're talking about what's going to be happening in 2013. In the studios is Robert White. He is an enrolled agent and tax consultant with H&R Block. He will be in the studios here twice a month, and he's going to be here next Tuesday. So if you've been hearing the show and it's maybe started you to think, make sure you email your questions next Tuesday, and then next month it will be the first and third Tuesday of the month, and it will continue on that schedule until April. And then April, we're going to go back to the first and second Tuesday to make sure that we get him in and talk before April 15th. So, thank you for being on Valley Talk today. Some very, very interesting. I learned a lot today. Hopefully our listeners have as well. If you missed the show and you want to hear it again, we're recording the show, and you'll be able to access it on our website, kgal.com. If you want to, if we went through some stuff too fast and you want to kind of rewind, you can do that. So that's a good thing about putting it on a podcast on our website, kgal.com, and it'll be available probably about 2 or 3 o'clock this afternoon. What else do we need to visit with?
Just a couple more things for what's going to affect 2013. One is the marriage penalty is being removed. Now, people say, what do you mean? I don't want to say people are penalized for being married. I've been married over 40 years. So anyway, what has happened is that when you look at the deduction, standard deduction, it's worked out that in the past, you have a single person has their deduction, and as you went up in the tax brackets and everything else, it became that married filing jointly were actually only getting 167% of the bracket instead of 200%. Translated, what that means is normally you would think if you should have the same deductions. 1 and 1 added together should be 2. Well, we were adding 1 and 1 and getting 1.67. So that penalty is being removed so that people filing married jointly are not being penalized for filing married jointly. And it didn't affect a lot of people, but it did affect it. What they also are, though, doing is they're expanding the 15% tax bracket for married filing jointly. That, again, affected a lot of people, because what would happen is sometimes when you'd have 2 single people and you combine the income, then you, instead of being 15, you jump to 25 very fast. So now they're making that 15 stay, and I had this happen to a lot of people that, they added their incomes together, so they're in a higher tax bracket, which made them think maybe we should have kept things separate. So this is, again, taking the penalty away from being married and filing jointly.
Which is, for those involved in promoting family values, it's a good thing, because it was encouraging a lot of people to not get married and just live together.
Just all sorts of,
Yeah.
The final that's going to be coming in for 2013 and this affects higher income levels. Basically, if you're married filing jointly, $300,000. And our jargon, we use PEP and Ps, but essentially, up till this point, there has been no phase out on personal exemptions. People are allowed to take a certain, exemption. The number of people you claim are called exemptions. And I think this was a Bush change where they took there was no phase out. Now, before that, if you had a high income, you started phasing out. Phasing out means you lose. You started losing the exemptions. You also started losing the amount that you can itemize deductions. Well, we are going back that the phase out is permanently removed for lower income, which means, again, if your income is under these levels, there's no limit on the number of exemptions you can have, and there's no limit on the amount of itemized deductions you can have. If your income's above this, we start limiting your exemptions, and we start limiting the amount of itemized deductions you can take. Remember, I mentioned earlier, exemption deductions reduce income that's subject to tax. So, again, this only affects people that are over $300,000, and it starts reducing the amount that they can subtract.
Okay. We need to take one more break, and then we're going to come back with some final thoughts from Robert White, our tax consultant from H&R Block here. He's going to be here twice a month up through tax day. One more break, and we'll be right back on Valley Talk.
When you look out across the Willamette Valley, you'll see plenty of banking choices. Willamette Community Bank is here to give you an option that's pretty unique, like no other, in fact. Hi, this is Sue Kalina, Relationship Manager. Willamette Community Bank provides an alternative to large national and regional banks by offering customized financial services and local decision-making to benefit local people, local families, and local businesses. How many banks can say that?
Willamette Community Bank, service like no other. Member FDIC, Equal Housing Lender.
Have you tried Snore Break? Snore Break is the easy and exciting new way to sleep, and it works faster than you thought possible. It's simple. Place one Snore Break liner under your pillowcase before bed. You won't even know it's there. Each Snore Break liner is infused with natural essential oils that guarantee a real difference. It's the same soothing technology used in relaxing spas. Available for your home for the first time ever. Snore Break is soft and virtually undetectable, and it's guaranteed to work. For a limited time, you can try Snore Break risk-free before it's in stores. Call 1-800-508-0240. See a difference faster than you thought possible. Get your risk-free trial of Snore Break while supplies last. Call 1-800-508-0240. That's 1-800-508-0240. Call 1-800-508-0240.
It's Chris from the Boys and Girls Clubs of the Greater Sandy Am. If you're like me and made a resolution to lose a few pounds, you should join me in our 2013 Diet and Donate competition. A $50 donation for kids gets you in. Weigh in by January 9th, and regularly after that, on April 9th, Biggest Losers will be rewarded with accolades, admiration, and prizes. You lose and kids win. Drop by the club at 305 South 5th Street to get started.
Landscapers, nursery farmers, and homeowners prefer Land Pride rotary tillers because they just plain work. Rugged and dependable, Land Pride tillers come in your choice of forward or reverse tine models and are proudly made in America. You'll find Land Pride tillers at Lynn Benton Tractor on McLean Street in Silverton or Highway 99E in Tangent. And you'll find more details at lynnbentontractor.com.
Lynn Benton Tractor, we're still doing business the American way.
Start the new year off right in downtown Albany. Clothing, fine jewelry, do-it-yourself craft stores, furniture, toys, gifts, salons, event venues, live theater, movies, and 23 restaurants. More choices than you'd ever find at any local mall. Find it all in historic downtown Albany. Grab a cup of coffee, learn a new craft, do a little shopping, pamper yourself at one of the many salons, and then enjoy a scrumptious meal. Bring your family or meet new friends. Great entertainment, delicious dining, and unique shopping. It's all happening in historic downtown Albany.
Jim Bohannon, weeknights on News Talk 1580, KGAL.
Valley Talk, Dave Adams. Robert White is with us, H&R Block, an enrolled tax agent. Twice a month he's going to be here. And next week, Robert, what are we going to be talking about?
Next week we're going to talk about the phrase is going to be health care reform and taxes, and what do they have to do with each other?
Good question.
And it's everything. And that's going to surprise a lot of people, but we'll talk about that next week.
So tune in and make a mark on your calendar. It's next Tuesday. And John Gibson, you have some thoughts about some of the folks that are looking at these numbers not liking them.
We all like all this stuff, and we've had a good time. The market is not liking this, and it's down again today. Amgen came out and said they didn't get a tax credit, so they're lowering their estimates. That leads to lower employment, job cuts, or higher prices. And today is the first day of the earnings season for the fourth quarter of 2012. Alcoa is the first of the 30 Dow components to report. And the old saying is, as Alcoa goes, so goes the market. But at this point, I would say that I'm more looking at 1250 or 12,500 on the Dow than I am looking at 14,000.
All right. Tomorrow, we are going to be here with Victor Coons, Vet Talk, here on KGAL's the Valley Talk portion of the show. We'll be talking about issues concerning veterans. Again, don't forget, next week, Tuesday at this time, Robert White will be back here, and we'll be talking about health care and healthcare and taxes, right here on Valley Talk. My email, dave@kgal.com. You have a few more seconds yet to get your entry in for Quiznos Taste on Us. Hopefully you win. I'm Dave Adams. Make it a profitable and safe day. Thanks for listening. Bye-bye.
owned and operated, this is the very independent News Talk 1580 KGAL, Lebanon, Albany, Corvallis.